Hey, welcome to Classic for the Investors and Microcap Explosions. This is Mariusz Konieczny. In this video, I'm going to talk to you about why due diligence and Scuttlebutt is important and how it can save your butt. And this will be a great example of how Scuttlebutt could have saved investors of Swift Water Decaffeinated coffee. Because you see, the better you understand the business, the better you understand the risks. And also, the better you understand the client's problems, the better you understand the solutions that your company provides. But in this case, with this company, we talk about risks. So with this company, if you drink coffee, you are aware of decaffeinated coffee, right? It's not new and many companies do it. However, what is new is decaffeinating coffee without using any chemicals. And this is where Swiss Water comes into play. The company is the only company in the world that decaffeinates coffee without using any chemicals, because it holds the rights to its proprietary decaffeination process. It possesses a nice moat, keeping the competitors at bay. So this is a good position for this company to be in. And if we look at the chart of Swiss decaffeinated coffee with a ticker symbol is SWP on the Canadian Stock Exchange, you see how from like 2012 the stock was trading at $2.50, and it just took off to about $12 by the end of 2015, and then it was sliding, and then it really took a hit here during the COVID, and then it never really recovered from that point. Here's your income statement. As you can see, revenues about $100 million. It generates gross profit. It generates operating income, and it generates net income of about $3 million. When we compare it to the company's market cap, 3 million to 28 million market cap, it's less than 10 times, right? So it looks good. And it looked good for a while, for quite some time. And if you look at the company's revenues over the last, let's say let's look at it what they were like in 2012, 2013. In 2011, 2012, they were only 60 million. So you can see they are about 100 million now. It's understandable why the stock price has done what it's done. And the reason for this is that, you see, this company doesn't have to really worry about customers and clients. It has more demand than it has capacity. So the idea behind this company was that it was operating its facility, because you see, this company needs this kind of facility. It's like a chemical process to get this coffee decaffeinated, right? So it needs to have this. Yes, it has this technology, but it also has to have this chemical process to process it. And in its one facility in Canada, it was literally running at full capacity, and it couldn't grow revenues anymore because it was like full capacity. So the idea behind this thesis was that, we're going to build another line or another processing line in a new location, and it will be fantastic. It will grow our capacity, and we will be able to grow revenues and of course profits. And to do that, to be able to build that new facility, which costs a lot of money, you can see here the balance sheet. The company had to take on quite a bit of debt. So we see here borrowings are like $42 million worth of debt, and it was able to build the new facility in a different location for quite a bit of money, but for a small company like this, it's a big deal. But it borrowed money to do that. Okay, so that was the thing. And they commissioned it and they put it into production, and everything is great. And I just want you to listen to this pitch from this particular investment individual, which was talking about this company when it was like, it pulled back a little bit from these highs, but it was around, $6.50 per share, and how this individual was talking about, how it's a great company and all that, and how it's extremely undervalued. So just have a listen.
Robert in London, Ontario. Go ahead, please.
Gentlemen, I recall in the past Stephen mentioning that he has a large position in Swiss Water Decaf. Mm-hmm. So I was wondering if he could provide an update on this company, as well as what a good entry point might be for someone interested in taking a position in this company. Thank you.
Right. So, we still have a large position. We haven't sold anything. We really love the company. The company has just completed building a new manufacturing facility in the Vancouver area. So what they do is decaffeinate coffee using a chemical-free process called the Swiss water process. And they're really the only ones in the world now that do that. There was a couple of competing older technologies based on carbon technology, but those plants have since closed in the last 12 to 18 months. So they've been gaining a lot of market share, good volume growth, increasing their margins as well. But obviously they couldn't take on any large new customers at the time because their current facility is running just about at full capacity. So now they're testing out the new plant. It's complete, and I would expect next year to be a stellar year for them. I would think they're going around looking to onboard some pretty large players. As you know, their big customers are food service companies like Tim Hortons, but they have a very diversified customer base of roasters, of specialty coffee chains, of importers, and being the only ones with this technology. I think they're gonna just shine next year. So we're hanging on to our stock, and this is actually a very good entry point because the stock is extremely cheap on a valuation basis as well, even though it's come up a little bit. Mm-hmm. So and it pays a nice over 4% dividend while you participate in the growth of the company.
As you can see, it's kind of hard to get not excited because obviously this company is special. It's the only one in the world, has this technology. It just commissioned this new facility. It's operating at full capacity, and it's about to increase its production. So people jumped on it, trusting, not doing necessarily their own due diligence, not doing any scuttlebutt, and just trusting what people are saying. Now, I wrote about this company during COVID in the How to Profit from the Coronavirus Recession. So it was like around here. So the stock is up since then. And this also shows you another importance why if you don't overpay for things and when they go bad, you don't really lose much money. But people missed a very important thing about this company because they didn't understand the business, or they didn't do the due diligence, or they didn't do enough of it, or they didn't do the scuttlebutt, and it was right there in front of them. And here's what I mean. Okay, if we go back to the income statement and we look at it and it's clean and it's nice, as I said before, generates about $100 million of revenues. Gross profit is about 15.6 million. They have administrative expenses, sales expenses, and then operating profit is about 5.1 million. And because they took on some debt to finance the expansion, they have a quite big finance expense. So, but still the company is net income positive and it's not losing money. Now, what's important about this business and understand is how do they generate this revenue? What is important to generate this revenue? And that to find this answer, we have to go to the balance sheet. You see, if you look at the assets, right? The property, plant, and equipment, $100 million, right? This is what I showed you before. This is this, okay? They need this kind of equipment to be able to process coffee into decaffeinated coffee. They need this. If they didn't have this, yes, they have patents and technology and all this, but they need this to be able to do this, okay? Just like if you mow grass for a living, you need a mower, right? You're not going to do it with your fingers. So this is extremely, extremely important. And now, you already know that they had to build that the current facility was running at full capacity and they had to build a third one. If something happened to this facility, it's a big deal, right? Okay, so they have two locations. Their old location, the one that's running at full capacity, not the new one, is located at 3131 Lake City Way. Do you know what this is in front of you? This is Colliers International, okay? This is a commercial real estate brokerage company. So they have their location, their entire facility is located in this building here, okay? Which is leased. And here you have Lake City Lands, this entire thing listed for sale with a commercial real estate broker, okay? And in this listing, the broker is saying exceptional redevelopment opportunity with holding income. Can you imagine redevelopment opportunity? Because this property is located in an area where the use of this land, the use of this property has more value to be developed into something else. This is huge because, and not only this, in this flyer, it talks about how a buyer can buy 19 acres directly on adjacent to Lake City Way and SkyTrain station, rare opportunity to secure land directly on rapid transit, commercial redevelopment, transformation, and holding time. Existing leases provide over $2.2 million of annual net income with leases expiring in 2022, 2023. So in other words, the broker is saying, you buy this thing, you permit it, okay, and while you're permitting it, you get annual net income, and then those leases expire in 2022, and with caffeinated water, it expires 2023. You kick out your tenants, okay, because the leases expire, and you get to do whatever you want from this land. Now, from the point of view of Swift caffeinated water, this is an absolute disaster, because if they lose this place, they don't have a way to make revenues from that facility anymore, right? So they have to rebuild this thing somewhere else, and that's gonna cost another $50 million. So you as an investor, you're buying this thing because you're looking at, revenues, $100 million. This guy on TV told me to buy this, and nobody is paying attention to that this thing is about to get bought out, and the flyer is all the way on the internet. The company is going to lose out, and the crazy thing about this is that this thing was on the internet in 2019, okay? That's when it was being promoted. And now, do you think the company told investors about this, that it was about to lose its property that was generating those $100 million? I doubt it, because this guy on TV had absolutely no idea. Let's listen to this piece.
Right. Well, the company has grown its sales tremendously over the last 5 years in terms of their volumes and revenue line, and even improved their margins and free cash flow. However, in March, after announcing a record year in 2019, they cut the dividend basically to accumulate cash to build a second new line at their new plant in Delta. And they announced that second line was going to cost another $45 million. So that sort of stunned the market after the company had spent about $50 million on the first new line. So all the those investors that had bought it for the dividend, of course, sold off.
Swiss Water Decaf, would you be a buyer? This is one you followed for a while, Stephen, I think.
Yeah, I followed it for a long time. The results were actually pretty decent. The volumes held up pretty well during the pandemic last year. Of course, their big challenge, as I've mentioned before, is that they have got to build a second new line because they're going to have to move from their old plant, and that's going to require, I saw in the last press release, another $45 million of capex and $2 million of startup costs. So, this is a small company that already has a fairly large amount that they borrowed to build the first new line in Delta. So having to move from Burnaby in the next few years is going to require them to either raise equity or borrow more money or a combination of both. So I would stay on the sidelines until that is resolved, until one sees how that move is going to be financed.
So as you can see, he appears to be very surprised that this is what happened. If you look at the company's press releases, let's see when they said anything about the lease. Okay, on May 25th, 2020, Swiftwater receives notice of lease termination at Barnaby, BC, effective June 2023. Today announced that it has received formal notice from the new owner of the legacy production site that its lease there will not be extended beyond June 7th, 2023. As previously announced, had determined that in light of the change of ownership, it would move forward immediately with the preparation to build a second line plant with the goal of completing its prior expiration, blah, blah, blah. And in some other filings, the company was talking about that as a result of this, it will have to build another line or expansion to the facility that will cost it about $50 million. Now, $50 million, okay? This company has a market cap now of $28 million, okay? And already borrowings of $42 million. And now, over the next 2 years, it has to spend another $50 million to build another facility, another line, just to be able to maintain these revenues. Okay, if it doesn't do this, those revenues are going to collapse, right? Because it needs this facility to be able to produce it. So now, as you can see here, this, if you are the kind of investor that does work and full due diligence, and you understand the business behind it, you understand what drives revenues, what's important to revenues, then you understand the risk. And if you just, all you have to do is punch in the address of that location into Google and just research where it is located, whether it's leased or owned, eventually you would have found the listing for the property being promoted as a redevelopment. You would have seen that this was coming way before the management even talked about it and way before anybody else noticed. And at first I was looking at it maybe, hey, as a possible, investment opportunity. Like maybe when I heard about the lease not being extended, I was thinking to myself, hey, maybe there's a way to get some people together, maybe even buy the property and extend the lease, which would make the stock price double like overnight. But then after I saw this as a redevelopment opportunity, fantastic location, it just all made sense why the property sold, what's going to happen to it, and there's no way they would extend this lease for another 10 years or anything like this. And now Swiftwater Decaffeinated coffee is pretty much kind of screwed, at least in the short term, because until they figure out how they're going to finance it, if they finance this $50 million expansion through equity that's trading at $28 million, that would result in about 200% dilution, which takes away the whole thesis. And if they finance it with more borrowings, well, do you want to buy a company that has a $30 million market cap already about $45 million of debt to take on another $50 million of debt? I don't think so. You have no idea how this situation with this company pisses me off, because you have Bloomberg put on some expert talking up the company, talking up the good points, and not really understanding the basics risks about it. All you had to do is put an address to Google and you would have known that the company's main facility was up for sale and they were about to lose their lease. But no, nobody has done it. Or maybe some people have done it. But many retail investors lose money because all they hear is a propaganda from the company, from other investors who don't do their due diligence, don't do their scuttlebutt. And this is what happens when obvious risks become significant and surprise everybody. That's why I am so diligent about doing my work, doing my scuttlebutt, because I've lost enough money in the market already. If you are, you know this already. If you are part of microcap explosions, you know the kind of research that I do, and you know the kind of companies that are out there. You know that they are researched as much as I can. I'm obviously going to make mistakes in the future, but definitely I'm not going to just go out there and listen to a bunch of propaganda and like some other people do, especially in the microcap space. All they do is just they bring in the management, they interview the management, and then they let the management just talk about the good points and hide all the risks. And when bad things happen, we lose money. So if you are serious about investing, you better do the work. Okay, and if you don't have time to do the work, then take a look at microcap explosions, because nobody's going to do the kind of research that is required to truly understand the companies and the risks behind them.